Let's continue the CEO conversation here. We're now joined by the CEO of Fortress Paper. Fortress Paper reported its second quarter this week in line with expectations, but a loss of $4.6 million on EBITDA. Two of its main business segments, it's dissolving pulp and banknote business have been struggling, but the company's wallpaper business has been strong. Here with an update is Chad Wozelenkoff. He is the president and CEO of Fortress Paper. Chad, thanks for joining us today. So let's talk about these numbers. You're recording a loss. How long will it be until the company can turn that around, and what do you have to do to turn that around?
Actually, we did post a positive EBITDA this year, or this quarter, of just over $2 million. It was in line with analyst expectations, but most of the growth is coming up in Q3 and Q4 as our largest asset, our Thurso dissolving pulp mill, fully ramps up and implements the proposed cost structure. And again, that'll be the impact in the latter half of this year.
Yeah, now that pulp mill is up to about 70% operating capacity. And I think that's a little behind schedule. What's the challenge there, and when do you get it up to full capacity?
Yeah, we've been making quite a bit of progress, and we're very pleased. We spent a couple $100 million retrofitting that asset. All the places and parts that are new and that we put in are performing above target capacity, so it's running well. The issue we're facing is that it is an older asset that had some limited maintenance done by the previous owner as they were going through bankruptcy and restructuring. So again, they had limited capital. So as an example, in the month of July, we had a disappointing month. The mill went down for two major corrections that were required. One was a water pipe that broke. It's just been there for 30 or 40 years, completely unexpected, nothing to do with our conversion, but the leaking water started to undermine one of the buildings that had a slab, so we had no choice but shut the mill down for about 3 days. Another issue was with the drying machine. As we make our new product, dissolving pulp, it's a lot more fragile, so it was not an issue for the previous owners, but it's become an issue for us. So we had to shut the mill down again for 3 or 4 days to retrofit, realign everything, and now it's been running well. So for the last approximately 2 weeks, we've actually been running at over 100% of our target capacity. That being said, 2 weeks does not guarantee a long-term trend. There's still more maintenance to be done. We expect, unfortunately, probably some more breaks or issues to arise. But we've dramatically increased our maintenance budget for the next 12 months to basically focus on any potential issues and get them behind us. And at that point, we're very comfortable that we will reach at least our 100% targeted capacity and our overall proposed cost structure.
Now, dissolving pulp price is obviously important to your business. So what's your outlook for dissolving pulp prices? And help us understand how the price of cotton interacts with the dissolving pulp price.
Yeah, previously, over, say, the last 5 years, there was a very strong correlation between cotton and the viscose, or rayon, which is those are our end customers. They buy our dissolving pulp and make that type of product, substitute for cotton. Over the last 3 or 4 months, that correlation has completely broken down. Cotton has fallen due to increased supplies and inventories in the world, but the dissolving pulp price has been very, very stable, in and around $1,050 to $1,100. The reason it has broken apart is due to there has been new capacity brought online around the world in dissolving pulp. The majority of that new capacity is in Asian countries, and the cost structure is much higher. They have to import their wood chips, so their wood cost alone prior to making the product is around $700 per ton. We, once we're fully ramped up, will be producing the product just over $700, finished product delivered to China and into Shanghai. So again, it's these high-cost producers that cannot allow the underlying price to drop below, say, as I said, $1,050. Otherwise, they have to idle capacity, shut it down, and their pulp is required by the viscose producers to continue to produce. And everyone is making good margins, even at $1,050.
Chad, I want to ask you about the security paper business. This is a really interesting niche business. Remind us what currencies you are currently printing.
So we don't do any printing. We are the paper maker. So we make the substrate that goes to the printers. So the national banks and the national printers, those are our customers. We are the sole supplier for the Swiss franc. In any given year, depending on requirements, we produce the euro for up to 10 countries. We produce passports for dozens of countries, visa stickers for India, China, and places like that.
Now, provocative question here. Look, if the euro falls apart, if the euro sheds some countries, is there any opportunity there for you as other countries will have to start printing brand new currencies?
Yes, there right now, there's a lot of speculation that could occur. National banks, in general, are risk averse, and they have to have backup plans to ensure that if something catastrophic were to happen, again, they're prepared for that. There is not enough banknote capacity in the world to accommodate something like that. So in a more orderly fashion, and/or countries would have to be preparing in advance for something like that. So the banknote industry would go through a very robust time if something like that were to transpire. But at this point, all indications are the Eurozone is still going to try to work this out over the next year or two.
All right, fascinating stuff. Chad Vasilenkov, thanks very much for joining us today.
Thanks for having me.
That was Chad Vasilenkov, the president and CEO of Fortress Paper, joining us from Vancouver. Well, coming up, we'll update you on the markets.